Welcome back, my awesome people. I am here with another episode and another interview that you will be highly interested in, and that many of you have actually asked me to bring him back on. I have Katara again of TappAlpha, who has revolutionized the ETF industry with their daily covered call strategies through TSPY. So, let's get right into it. For those that did not watch the previous interview, can you just tell us a little bit about TappAlpha, a little bit about yourself, TSPY, and of course, the amazing strategy of the daily covered call?
Yeah, absolutely. Jacob, great to be back. Thanks for having me again. I had a great time last one and looking forward to today's discussion. So TappAlpha is really a new company that is all about democratizing access to powerful financial opportunities. And, one of the biggest things is there's folks that just maybe don't have knowledge or the resources that, some of the folks at the top always do. And our whole goal is to take those powerful financial opportunities and use different tools to bring them and democratize access for everyday investors and advisors. And so two tools that we use that are really powerful to do that. Number one, technology. AI, machine learning, technology in general as a category is a really powerful thing to help democratize complex things like we're talking about in the finance space. And then the second thing that I learned about a year ago was the fact that you can actually use financial tools like ETFs to take these strategies and package them in a way that you can give them access literally to anybody who has a brokerage account. And when you put those two things together, it really amplifies the power of what you're able to bring to the masses, the general public, people that don't necessarily have that secret backdoor entrance into some of these opportunities. We're here to bring them out so that everyone can take advantage of them, understand them, and figure out, hey, is this a fit for me and what my goals are? And if so, I want to also participate. So that's the whole idea behind TappAlpha. And one example of that we just launched on August 15th was our very first publicly traded ETF on the NASDAQ, and that's called TSPY, where it takes a strategy, covered call writing, but using this new thing called daily options, and wrapping that around the S&P 500. And we make that available on the NASDAQ so that anybody with a brokerage account can buy TSPY. If you have $26 to buy a share, you can participate. If you have $10 million, you can participate. But that's what I love about ETFs, is that they're available for everybody. So that's the goal. That's the company. We've been around for about 2 years and super excited to dig in and talk a little bit more about technology today.
Definitely. And I really like that point about the ETFs because it is made for anybody and everybody, whether you have $10 or if you have $1 million. And my viewers know, and I'm sure many of my viewers we are heavy ETF investors, especially with ETFs that pay a good dividend. I know the TSPY does pay a double-digit dividend, which pays monthly. So my viewers, definitely look into it. Now, how does TappAlpha? Now, I know data and privacy and security are the #1 issues these days. How does TappAlpha, I guess, ensure that they protect their customers' data and privacy, especially when you are using a lot of AI and machine learning?
Yeah, it's we take ultimately the security by design approach. So embedding robust encryption, multi-level authentication, and sort of continuous monitoring for all of our systems. And data protection is sort of part of our core culture. One of the biggest things is trust through transparency. So we share our information so that everybody knows what they're getting into. But our users' information is very, very important to keep protected. And so we do that from a system level approach to make sure that data privacy and security are always maintained.
And that's amazing because you have to have those multiple steps of verifying the user and keeping the security and the privacy, especially these days with hacking and the black market, going rampant. Okay, thank you for that. And so since our last interview, the elections have not happened yet, but we did talk a little bit about it. But now that Trump has officially won the election, and as you know, he is kind of cleaning house in the government. He has placed some interesting people in his government, like Elon Musk, who was very machine learning AI. He's he's the guy. With these drastic changes, in our last interview, you mentioned that TappAlpha will not be changing its strategy moving forward due to politics. You're keeping your strategy, your core strategy. But now that these policies are different, especially with tariffs coming up and a whole bunch of changes that we haven't seen in many, many years, is TappAlpha, or are you maybe planning on changing strategies or adding things to your strategy that might maybe further maximize gains or maybe even further develop TSPY?
Yeah, it's interesting because TSPY as a strategy leverages options. Options thrive in markets where volatility goes up because premiums actually go up with it.
Yeah.
So the election was really interesting because there was this big post-election rally that happened. And the strategy that we used was able to take advantage of some of that increased volatility as well as the uptrend of the market and package those gains and give them back to our investors. But as things change, so everyone's trying to figure out what's the Trump trade. What industries are going to be
Yeah.
hurt by the tariffs? What industries are going to be benefited by the tariffs? And it's so interesting. There's one industry that is universally kind of untouched and people are investing heavily in, and that's the finance sector and fintech technologies as well. Because tariffs won't impact it, the markets are going to change based on it. And as there's flows that happen in finance, the companies that are actually in this industry do really well over the long term. And as far as like our products, we are, TSPY itself is really bullish on the American economy. That's why we leverage the S&P 500 and find ways to do a little bit better and provide additional features with the products that we offer. So that strategy is going to stay where it is, and it's actually a really interesting time for a strategy like this. It has equity growth with the underlying shares of the SPY, but it also generates income on top. And that income is not connected directly to interest rates like other fixed income products. So as people are trying to figure out if there's going to be reductions in interest rates depending on what happens with inflation in 2025, how do you replace some of that income? Options-based strategies are a really interesting opportunity for folks to do that. So we'll continue to sort of build out the suite, hopefully in 2025. TSPY is our first one. Apply it to other underlying securities and maybe expand from there. And then one of the other things we've been talking about too is everybody's kind of looking for different levels of yield. So you have a choice of, focusing on growth and leaving all the yield in the funds so that they grow over time if you have a long timeline. Or the other extreme is take the growth that you have in a fund and distribute it out as yield and then keep the fund relatively flat from a growth perspective. So people want different gradients on that. And so we're talking about ideas for how do you provide a dynamic sort of yield product that can help kind of check the box for what the markets are demanding. But it's going to be a really interesting year with change next year from an American economy perspective. And hold on to your hats because it's been a wild end of this year, and beginning of next year is going to be, I think, more of the same.
I definitely agree. And you know what? Thank you for that wisdom because I would not have thought that the two sectors, finance and fintech, would kind of be not really affected by the tariffs because sometimes, tariffs can be placed on services or other, components. But so viewers, hey, you got the inside scoop right there. Fintech and finance are possibly the two sectors that won't get affected by what happens coming in January. And especially if you're Canadian, we're already over here screaming about these tariffs. I don't know if you saw, but the other day they were talking about Canada being the 51st state. So that would be funny to see.
Come on in. Yeah, then there's no tariffs across borders because there is no border anymore, right?
Hey, as long as I'm getting paid in American dollars, I'm all for it.
Smart man.
So kind of moving a little bit away to a different topic. So there's a lot of obviously older companies, especially before COVID, that were quickly trying to adjust to this new digital world, to this new digital transformation. A lot of older companies, brick and mortar, closed down because they couldn't adapt quick enough. What do you think are some of the biggest barriers that companies do face when they are transforming into a digital, I guess, platform, or they're becoming more digitized rather than brick and mortar?
I think there's three key ones. The biggest one is culture. It's people, it's change. Change is hard. And when you're in an organization, you've got to build a culture that can move quickly and be open to that change and understand the why behind the change. The second thing that is crushing for some old organizations is the legacy systems. When you're stuck on a system that's kind of been your bellwether and it's been robust and it works, you don't want to rock the boat. And so creating change just to get back to the same level you were is a hard thing to justify. The main thing that people need to understand is if you leave your legacy systems in place, you're actually not going to just get back to the same place that you were. You're falling behind every day because of how quickly other innovations, technologies, and then also we talked about cybersecurity is moving. And if you're not moving with it, you are actually, by staying in place, you're being left behind. And then the third piece that's hard, and I'm finding this out as I'm coming from technology into finance, is that regulatory complexities are real. And there's a reason that there's regulation in place is to keep people safe, keep consumers safe. But it's hard sometimes if you're trying to innovate and move at the speed that your business needs to move to navigate those complexities. And those three things, I think, are big barriers that make it difficult for companies that have legacy businesses to try and transition into the new economy.
I 1,000,000% agree. Change is, the biggest barrier. And just more onto that, do you think maybe misconceptions about AI technology could also be playing a factor? Maybe, oh, this is so easily hackable, we might lose everything, or machine learning may just crash one day and we lose millions. Those misconceptions, and how often does it really happen in a day to day? If you would like to give me your thoughts on that.
I think the reality is it depends on the application. It's a misconception on understanding what AI is and what it does. The way I try to think about it is you have a problem that you're trying to solve in whatever business. And all AI is doing, it's finding a more robust, technology-driven way to dynamically actually help you solve those problems. And so at the end of the day, depending on whatever security you have around this business problem, you can keep that in place, but you can actually solve and iterate much more quickly by leveraging artificial intelligence to sort of solve that same problem you're dealing with before. That approach, I think, opens people's minds to say, okay, AI isn't the scary box, but if I just think about how it can give me as an individual an accelerator to work on and fix this problem I'm trying to fix, then you start to see people open up a little bit more to understand how this can help you. And I can speak from personal experience. I started TappAlpha, it was literally like a month before ChatGPT became available. And it literally, it touches every part of our business. I would say we were ChatGPT native when we started out of the gate. And it's helped us so much because we didn't have to externally leverage expensive resources while we're bootstrapping a startup. And so it's all it is. It's just a powerful tool that helps you solve problems more effectively and more efficiently than you could without it. And if you think about it that way, it opens the mind for
So
sure.
overall, there's definitely way more pros than cons. Of course, there will be cons to everything and anything, but there are definitely way more pros. And just to piggyback off of that, I'm sure the past month with crypto especially has skyrocketed. Of course, due to the elections, but of course, it's starting to become more adapted by the mainstream. How do you think crypto and maybe fintech and maybe the future of digital transformation, how do you think that will happen or maybe connect with one another? Or maybe instead of crypto, maybe blockchain. What do you think about that?
It's interesting because with two things have happened recently. Number one, crypto is now being wrapped into ETFs directly. So speaking about this industry, that gives it a validation and sort of participation in the broader market. It gives it validity.
Yeah.
But then two, they actually added options now to one of the ETFs. Now you can actually trade volatility and options on a crypto-based ETF, which it's been actually widely adopted already. There's a ton of volume that's happening. So that's all to say that it's getting embedded in foundational financial tools. It's starting to happen and it's happening quickly. And if we take a step back, okay, what's the benefit of it? I mean, thinking about, you know, enabling frictionless cross-border payments, decentralized finance, tokenized access, blockchain tech will help platforms simplify everything from payment remittances to loyalty programs to improving transparency and trust. One of the things that I have to deal with every day in the ETF world is like when we do our option trades for TSPY, you have to clear the transactions every day, every time that happens. Well, if you could do that reliably with blockchain, it could be a significantly more efficient process than actually leveraging on some of the manual processes that go end to end to actually clear like billions of dollars of transactions every day. So the upside is huge. It's now sort of accelerating its transition into the mainstream.
It's pretty much being adopted by even Visa and MasterCard at this point. And also, it's kind of like a city that had roads and intersections compared to a city that only has highways, right? When you're on the highway, you're just zooming through all the red tape, the barriers, transactions are faster. When you're at red lights every 2 minutes, it's like, it's pausing time, it's pausing obviously money. So no, that's a very good point. And so I think personally myself, I think crypto is going to be not only the future, but just going to be a standardized form of payment that we can have an option for. We might still have Tether and paper money, but I think with Apple Pay and everybody just using digital money, we could possibly have crypto as our form of finance one day. And just to continue on that, what about the cybersecurity of not only crypto, blockchain, decentralization, fintech, just in general? What do you think about cybersecurity right now? Are we there yet where all these platforms are secure, or do you think we still have a bit further to go where people are more confident with digital apps and applications?
I think it's going to be a continual arms race. You think about two sides. You've got the security issues, and then the things that are trying to protect you against those issues. And as more technology comes, more AI, more capabilities occur, the the sort of black hats, the bad things are going to accelerate. So you've got to actually keep up from the good side too. So we're never done. We're never going to be done. But by leveraging, sort of different levels, you think about, decentralized finance. When you have these ledgers that are spread, you're increasing the surface area that creates more trust and more reliability. And that's the goal with some of this innovation and technology with crypto and blockchain that helps you get there. But are we there yet? We're matching. Are we going to be there ever? I don't think so. It's always going to be an arms race. And that's something you have to keep up with, which is another word of warning to the legacy companies, legacy systems that you got to keep up. Otherwise, it's going to be a dangerous world for you.
Exactly. And I mean, cybersecurity in itself is a form of warfare. So as you said, right, when the good go up, the bad will continue going up. It's just a war of the battles. And so let's jump back into TappAlpha. You did mention earlier that you guys might be working on a set of suites coming up. Would you ever adopt a crypto suite or a crypto ETF coming up?
It's a good question. We're busy right now proving the technology, the fintech that we have in our current model with our current ETF. Could this actually same technology be applied to crypto? Absolutely. And one of the benefits of crypto, well, benefits or a con, depending on how you look at it, volatility is very high. But
Yeah.
when volatility is high, now that there's options that are available on it, you can actually harvest bigger premiums because of that volatility. So that's definitely something that is possible. Whether it's on brand for us as TappAlpha, right now I'm really focused on low to moderate risk investors just because that's where I sit. But as the company expands, as demand expands, if there's a way for us to responsibly provide products that can leverage the benefits of crypto, but we can also manage the risks of it too, that's what we need to be comfortable to provide those kinds of products to the marketplace. So is it possible? Yes. Is it something that we're focused on in the immediate term? Not yet, until we have answers to the safety question of it in the long term.
100%. And that's a good way of putting it, because I've spoken to a few other CEOs and asked them the exact same question, and they also do ETFs, 2x shorts and leverages, and they said no, we're not doing crypto, not for a while, because they want to see how the security aspect, the reliability, and so on, and the adaptability. So with TappAlpha, other than the suites that you are mentioning, that might be coming out very soon, where do you see TappAlpha in the next, say, 3 to 5 years, especially with AI rapidly advancing every 2 seconds? Where is TappAlpha going to be in about a few years?
I mean, the hope is if we, hop on the time machine 5 years from now, I hope there's a suite of multiple ETFs that are out there that are providing value, where there's full transparency on what we're delivering. There's education on each one, and people really know what they're getting into with each of those products, and it solves a particular problem for them. Is it solving tax? Is it solving, I'm just looking for long-term growth? Is it solving, hey, I need income today, but I don't want to sacrifice growth for tomorrow? That's what we're doing right now. So are we able to solve real problems for people in the marketplace? And hopefully there'll be a suite of things that help us do that. The second piece of the business that I'm really excited to expand on, the underlying fintech can support all those publicly traded ETFs, but that fintech can also be scaled to support other people's endeavors, products, ideas. And one application for this that would be very clearly beneficial is, let's say we created the fintech tool that was able to be used directly by advisors. And if an advisor could take this and scalably, wrap the strategies that the underlying fintech provides on all of their, or a subset of their wealth management clients, that will be a huge benefit for them, because now they're actually they're providing value adds that their competing advisors don't. So it's that type of progression where we can raise the bar for value that's added, and do so in a competitive way, and do so quickly, because we're leveraging fast moving technologies, and putting AI together in a way that, I think about explaining the stuff to my mom, and I'm not going to expect her to sit down and jam out some AI driven code. I'm going to take the things that she cares about that'll touch her life from a problem set perspective, and I'll be the one to take that and convert it so it's really easy for her to get the value of it. That's the idea of the fintech platform. That's the idea of the ETF. That's the idea of the company, to provide access to that stuff that, unless you have the expertise, unless you have the financial resources, unless you have the know-how to do so, it's impossible to take advantage of it. But we want to make that impossible possible. That's the goal.
No, that is amazing, because it clearly points out that you have this technology, the fintech technology, that can be applied to pretty much anything and everything, and not only applied to that, but you guys are still building more, adding more to it, expanding it. I think that's amazing, because you're pretty much have a monopoly on this technology, because you're talking about licensing it a little bit, right? Like maybe sending licensing out to advisors or to other companies so they can probably use it. So I think that scalability is going to be amazing. And on that note, Sai, is there any last mentions, any last things you want to throw out there to the digital world, to my viewers?
I'd just say that this is a really exciting time to sort of be in this space. If you're interested in investing, interested in long-term planning, it's just a really exciting time. So the other piece of it is, information is available out there to figure out what's the best fit for you. I love that we just got into this market, this opportunity, and the future is bright. And it's been really fun for us too, because we're starting to understand what people in the marketplace want. Please reach out to us if there are things that are on your mind, things that you want differently, challenges that you have that you would love to see potentially solutions in an ETF, or where fintech can help. We're all ears. Our whole philosophy is, we want to make sure we're listening to the market, taking our expertise and solving those problems that are there. So keep those coming our way. And then it's actually interesting that we're connecting just today, Jacob, because we ended up doing our very third, now it's first, second, but our third distribution declaration was yesterday. Today's the X date. And so we
Nice.
just got that out, and we were able to provide relatively consistent distributions. We're at about 13.5% that we just did on XDiv today. And so we're excited that the strategy is working. It's giving consistent income generation at a pretty good level, and we're doing so in a way that's keeping long-term growth and balance. So take a peek, read up. We're going to do our press release tomorrow on TSPY and our third distribution. But I appreciate you having me on. When the first time, that was my second, I think, online interview, and I was really excited to have a chance to have a conversation with you in it. Just the topics you cover, the way you make complicated topics simple. The analogy, for example, that you mentioned, freeways or side streets, it's brilliant as a way to explain complicated ideas to folks. So I appreciate the work you do here, and I really appreciate you having me on.
Well, you know what, Sai? Anytime you come on this channel, there's always amazing wisdom and knowledge. And I'm sure today, you just drop the best gems, and you can use that highway reference at any conference. It is not patented, it is yours. So
Footnote will always be there. Jacob thought.
I totally appreciate it. Sai, thank you so much for being with me here today. I will have all of Sai and TappAlpha's information in the description box. And my viewers, as we mentioned earlier, a double-digit dividend payout that was given out today, the declaration was today, and you're with the SPY. So at the end of the day, you're not going to go wrong, and especially for the next 4 years, especially when we have a Republican leader in the White House. There's going to be a lot of less red tape, less corporate taxes, and businesses are going to boom. And when they boom, if you have the stock or the ETF in your portfolio, guess what? You're going to boom too. So Sai, I am definitely going to have you on this channel again. We're going to definitely keep in touch, and I want to see where TappAlpha gets to in the next 6 months to a year, because you guys are using this volatility, and volatility is good for your company. So Sai, thank you again. And my viewers, please check out TappAlpha, and until the next time, stay ranting.